Jeff, one thing which hasn't shut down is been markets. They're still going. They're not working from home by the looks of it. What's this week entailed, Jeff?
I think this week has been quite an interesting week for markets, just given the backdrop of our call last week when we talked about how weak markets has been. This week has provided us with a real contrast with global equity markets staging some of their biggest recoveries that we've seen since the 1930s, which is quite phenomenal, but maybe not when we think about the speed of the decline that we've seen over the past couple of weeks. So where are we today? We've seen the S&P rise 17% from its low, the FTSE rise 16% from its low. So quite material moves. If we think about a bear market has been defined as a 20% fall, and we're very close to a 20% rise, which in normal circumstances would be called a bull market. So a very contrasting week relative to last week for everyone. I think the other things that have been really interesting this week just to observe has been a relative degree of calm starting to come back into some of the financial stress indicators that we had been looking at over the past couple of weeks. So last week we mentioned how elevated volatility was at levels similar to what we had seen in the financial crisis of 2007, 8 and 9. Those volatility numbers have come back a little bit. Not surprising given how the equity market has performed, but that is a positive to see financial conditions start to stabilise to a degree. Indicates that at least the actions that central banks have taken to provide liquidity into the marketplace is having an impact. I think the other things that we've been looking at as a team is just the data that's been coming out. Clearly, economic data at this point in time, does it actually mean anything? Probably not. But what we can take from it is just the magnitude of and how swiftly the impact of COVID-19 has been felt in the economies across the globe. I think the key place that we're seeing that, probably the most notable one to think about, is the US jobs number that came out yesterday. 3.3 million people claiming unemployment benefit last week in the US. That's a number that is just unprecedented in history. I've used that word a few times in the past couple of weeks on our podcast, but that is just a number that has never been seen before. The highest number that we saw in the financial crisis was in March 2009 of 660,000 people on that claimant count. So 5 times higher than that and 12 times higher than the number the previous week. So the implications of that in terms of the economy really speaks to why we've needed to see the significant stimulus packages that have been announced at a government level over the past number of weeks. So at least what we can say there is that in the majority of instances, governments have stepped up to the plate. Stimulus packages have been voted through.